Hello everyone, I am Aanchal Nigam from Department of Management, School of Management Sciences, Lucknow. Today we are going to discuss the topic capital market, its role, functions and developments. This topic has been included in the MBA Specialization Finance subject Financial Markets and Services. The motive or the objective behind including this topic is to introduce the capital markets roles, its functioning and all the recent trends that are being taken for developing the capital market. Another objective of this topic to be included in this subject is to give an idea about how the capital markets, primary and secondary markets are working and how much and how they are preparing the investors or the public about the capital market trading procedures. If I talk about the outcome of this topic, the students after studying this topic, they will be able to understand about the importance of capital market existence. Students will also be able to develop an analytical skill after studying this topic effectively. They will be able to grab the knowledge about how to do the trading procedural activities in the capital market as a whole. They will get an idea about different kinds of functioning, whether they are done informally or formally by the capital market. So, moving toward the topic, first of all we need to understand the functions of capital market. This behind me you are watching about the functions that are included in the primary market. Basically, the capital markets function can be divided in two parts. First is formal and second is informal. If I talk about formal activities or formal methodology of capital market working, then in formal market the stock exchanges come forward for doing and implementing all the trading activities that are be done. For example, NSE, BSE, etc. Next, if I talk about the formal way of capital market, so in formal way, informally the trading has been done by means of dabba trading and grey market. Basically, the dabba trading is especially for understanding the way of doing trading of the exchange system. Basically, the operators of dabba trading used to do the accounts management over the books. Each and everything is illegal through dabba trading because SEBI's regulations is against this kind of informal trading. If I talk about the grey market, it has been understood that apart from a stock exchange, if there is any kind of working in the grey market through IPOs or FPOs are being done, then that comes also of the exchange system. Moving on further, if I talk about the functions that are being done by capital markets primary section, then that is origination, underwriting and distribution. If I talk about origination, basically the origination indicates the examining, evaluating and processing purposes for new project proposals in the primary market. It comes before any kind of issue in the primary market being done. Origination is done with the help of merchant bankers that are available there in the primary market. If I talk about the origination, it has been done for having an idea about the economic, financial, technological and other aspects of proposals and to have a check over the project's proposal. It is important to understand this process. The next is underwriting. If I talk about underwriting, so a single underwriter or a group of underwriter is very much essential for performing the underwriting procedures in the primary market. Basically, underwriters guaranteed minimum subscription of the shares that are available for trading purposes. For trading purposes, if we go ahead for underwriters to be done these kinds of things, it is important to have an idea about the underwriters and the minimum subscription as well. Basically, the underwriting is being done by the underwriters only and the merchant bankers will be performing those procedures. If all the shares get sold, then there will be no kind of liability in the hands of the underwriters. But due to any issue, if the underwriters have an liability, because if any kind of share remains unsold, then there will be the basic duty of underwriter to allot it all and to purchase it all on their name. Moving on further, if I talk about the next is distribution. The brokers or agents do direct contact with supreme investors. The financial intermediaries want to have in contact with the supreme investors for performing the job of distribution. The capital market plays a vital role in enlisting the resources and diverting them into more productive channels. The distribution is being done to the higher investors because of the reason they have immediate cash to provide to the people so that the trading purposes can be resolved easily. Moving on to the next topic, we have the capital market structure in our country. We need to understand the capital market structure because if we have the knowledge about capital market framework, if we have the knowledge about the primary and secondary market as a whole, we should have the knowledge about the structure procedures of capital market. So, it will be more easier to understand the working, and if anybody wants to make their career through capital market, they can come with these points easily in mind. First of all, we need to understand about the first element, that is government securities. Basically, government securities are also known as gilt-edged market. It is gilt-edged market because of the reason that the securities are available in the market and they are backed by the government and semi-government as well. The next is industrial securities market. Basically, industrial securities market are for the issues market of primary and secondary market. They are further divided in two parts, that is new issues market, as I already discussed about the primary market, in which primary securities or shares or bonds are being issued by the company to the investors who are in need of immediate cash requirements. The next, if I talk about, that is old issue market or stock exchange. Here there is secondary market to include the trading procedures by investors, that they can be institution or general public as well. It is also known as aftermarket or secondary stock market. There are so many stock exchanges like National Stock Exchange, Bombay Stock Exchange, Nasdaq, etc. These stock exchanges are a kind of platform for the people who want to invest and trade in these through these stock exchange market. The next is development financial institutions. There are so many development financial institutions that are being there for having support to give to the public or to the investors who are in need of money to promote their business or to develop project proposals or for developing some infrastructural things or any kind of financial help are being provided by these development financial institutions. IFCI, ICICI, SFCs, ITBI, IIBI and UTI are a part of it. IFCI is Institutional Finance Corporation of India. ICICI is basically a bank, that is Institutional Credit and Investment Corporation of India. If I talk about state finance corporations, that are SFCs, they are being working on a state level for providing a kind of finance to the state corporations, industries, etc. for their development. If I talk about IDBI, that is Industrial Development Bank of India. UTI is Unit Trust of India for investors. IIBI is Institutional Bank of India. Next is financial intermediaries. These financial intermediaries are playing an important role in promoting the capital market structure in our country, and they are helping the customers at every point, like merchant banks, for example Punjab National Bank, State Bank of India, etc. Mutual funds, whether these are including the open fund or closed ended funds. Then leasing companies are there, venture capital companies are there, and there are so many other financial organizations as well to accommodate the capital market structure in a proper manner. After understanding about the capital structure that is present in our country, it is important to have an idea about the inadequacies or some of the demerits that are available or was available during 20th century or also in present time also. So, there are some of the inadequacies in Indian capital market. There is lack of diversity in the financial instruments that are available for trading purposes to the investors in Indian capital market. There is a lack of control over the fair disclosure of financial information that has been provided to the investors for their trading purposes. It is very important to clear all the pros and cons if anybody is investing their money, because the money is very important to do any kind of business and to perform any kind of procedural activities for doing trading. There is poor growth in the secondary market, and it is because of the reason that most of the people are not aware about the terms that are being taken in secondary market. There are so many beginners in the secondary market, and that is why they used to take fast decisions that are many times not good for the Indian capital market as well. There is prevalence of insider trading and front running. Basically, if I talk about insider trading and front running, the person who is doing insider trading, it is very illegal activity and they have some kind of confidential information to provide to the outsiders who are their own relatives or their friends, family, etc. It will definitely impact the capital market as a whole, and it will be biasness that are being done by those kinds of financial intermediaries. Further moving on, there is a kind of manipulation of security prices also. Because of these kinds of activities that are being done like insider trading or front running by those different people over there who are acting as brokers or agents in the companies, they are manipulating the security prices through which the market seems to be very fluctuated to the outside public, and many more times the stock market gets crashed. Continuing with this, next is existence of unofficial trade in the primary market. There is an unofficial trading, as I already discussed it, like dabba trading, in which the books of operators are being taken over and they are the clearing operators only. They can handle it through biasness also. There is an absence of proper control over brokers and sub-brokers. It is very important to have a control over these people so that they can be in regulated mode and the traders and investors will be in a proper form to do the trade purposes effectively. Next is passive role of public financial institutions in checking malpractices. Many times it has been seen that due to the regulations that are being provided by SEBI, FERA, or in earlier days FEMA, there was regulation over these things, but most of the time it is seen that institutions like private investment firms or any financial institutions like IFCI or some more financial institutions need to be more active in checking up the malpractices that are being undertaken by the brokers, agents or sub-brokers. Moving on further, it is high cost of transactions and intermediation. The brokers and sub-brokers along with their associates are charging in most of the companies through online basis the higher transaction costs and other intermediary charges also has been undertaken on the name of SEBI, that is Securities Exchange Board of India. It should be taken that the cost need to be under full control or regulation in the hands of SEBI. Moving on towards the next topic, it is the role of capital market in India. We have properly understood about the capital structure and the inadequacies of capital market, but we should understand that capital market is very important also at the same time. Capital market helps in raising long term funds to very much to an extent for the investors. It definitely provides a kind of opportunity for public to invest in those kinds of securities through which they can earn higher returns. Very much important that to know for the public that in which security they are going to invest. Next is capital market make country enable to achieve the economic growth. Everyone can go and check the security prices, the shares market and the company's position by means of consolidated balance sheets also. But it is very important to have an idea through the analysis of Sensex or Nifty 50. The charts will show everything about the market that is going on trend. Capital market also plays an important role in making the investors capable of diversification for doing business. If they will have proper amount of capital, they will be able to diversify their business in various ways. one can make a kind of portfolio and one can invest in different kinds of business by means of having good amount of capital. If the funds will be there, then there will be no problem in starting any kind of a startup. And our government is also supporting in establishing startups, MSMEs, by means of providing different kinds of loans as well. Capital market has an important role in checking the barometer of the country, as I already said that if a country's stock market or its whole capital market is healthy, then it means that the per capita income is also going well and all the public are having a good habit of investments also. Capital market give chances to different institutions for doing various mergers, for having more returns and to promote more business opportunities to people. There are so many investors who are being undertaken the opportunities and they are developing their business at a fast rate. Capital market in India also attract foreign investors as a whole, as the SEBI has regulated that the lock-in period to invest in securities will be reduced to 1 year from 3 years in the past. So, that is why also foreign investors like NRIs also and other foreign people are very much interested in investing for capital market securities. The next is developments that are being undertaken in Indian capital market. It is also very important to understand how many things are being developing and already developed in Indian capital market to make the trading more smooth. First is economic liberalization. After being privatization, there are so many deregulations in the market, but after economic liberalization has taken place, each and every trading procedures got very clear, transparent and smooth for the investors as well as for the general public. The companies try to be a part of this capital market at an ease. Next is capital market. Indian capital market try to promote the private sector banks also by means of providing them an opportunity to merge with those banks who are not doing that much good. These private sector banks can also do a kind of check over the NPAs and other things as well. Next is regulating the foreign investments. Well, capital market to a very much extent try to regulate the foreign investments that are coming through forex trading or any kind of means of their investment purposes. SEBI need to regulate and they also regulated quite a much for increasing the portions from 5% to 24% as was seen in 2007. And now also after this COVID-19 pandemic, the foreign investments are going at a pace rate and after a few months this will become online. Next, Indian capital market provides a kind of online trading in Indian capital market. The online trading is important because of the reason that it will provide an ease to the investors. If I talk about the circuit breakers, these circuit breakers are basically to provide a kind of switch off mode in case of the market prices index go 10% upward. Then there is demat procedures for shares to provide a kind of eligibility to the people so as to open demat account with the depository participant, that is DP, and after that they can go on with the trading purposes. Next is there is a penalty for insider trading. If I talk about insider trading, as I already said, it is an illegal activity to do insider trading. There is a penalty that has been done by SEBI Act 2002, under which there is a penalty of 1 lakh per day and it can go up to 25 crores. The last point for having the development in Indian capital market is the periodic settlement of the payments that are being done while doing trading. SEBI, after removing the Badla transactions, SEBI included the T+2 settlement, that is trading day plus 2 days more. After including the receipt that are being provided to the people, the trading day on which the securities got allotted to the public, and then excluding that day, after 2 days there will be the settlement of transactions. After these points, I would like to sum up the capital market as a whole for making you available to be understand about primary and secondary market. First of all, the market primary beneficiary in primary market is the issuing organization, basically those companies who are issuing the shares, stocks, bonds, derivatives, etc. If I talk about the secondary market, so primary beneficiary is the investor or the shareholder. The main objective in primary market, if I talk about, is to raise funds by means of issuing initial public offering or FPOs. If I talk about secondary market, that is a part of capital market, the main motive or objective is to do capital appreciation or to have more capital. The last is, it includes new securities such as initial public offerings from the companies who want to become the shareholders or who want to create their equities. If I talk about the secondary market, it includes the trading of securities that are already offered to the marketplace, and it can be done as many times as the investors want to. The buying and selling purposes is only to create more profit in part of the investors. Thank you so much